Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. So let's have a look at an update on the charts and also the key technical levels for Bitcoin. So the key downside level to watch for me is 21.6. If we've got underneath there, I think it'd be very difficult for the market to recover. Also, the monthly pivot point, 22.8, it's very obvious why I've chosen that, because it's a 200-week moving average. If we have a look at 22.6, it's the low for the week at the moment. If that was broken, then I think that would be pretty bearish and we'd probably go to 22,000. Upside targets, I think we need to get above 24.5. That's very obvious. And if we could move above there, I think we could get a lot of liquidations, a lot of leverage liquidations who've got their stop losses above there, people that are short on the market who don't believe in the recovery. And if that happened, then I think we could move towards probably the 100-week moving average around 26.5 and then take a look again. But overall, any daily closes below 21.6, and that would be a bearish sign for me. Having a look on the charts now, you can see that we're moving towards this key trend line. And I think that's something to watch. It's located close to the 100-day moving average, which sits at around 26,500. So if we move up towards there, start to fail around here, then I think we could get another turn lower. But if we were to move above that area and start to sit comfortably above there, then maybe we can push towards something like 31,000. But at the moment, we've still got to get towards the 100-week moving average. I think also this Wyckoff pattern that we've been waiting to play out, and so the final explosive phase E hasn't played out yet, and that's another reason why I think we could probably test towards the 100-day moving average and even the falling trend line that I've just shown you. And also, I think looking at it there, it makes sense that this is where the market is sitting. You know, the consolidation fits with where we are now, so making one more big push higher does make a lot of sense. Having a look a little bit more closely at the weekly close, you can see the 200-week moving average. It wasn't that great, but we closed above it for the first time in 6 weeks. And we can definitely see some momentum. We've had a technical test of the 200-week and it's survived so far. So it makes a lot of sense. If that continues to happen, why we push towards this falling trend line, which really marks the downtrend. And if we break the downtrend, then that will set up some very interesting trades in future. And if we get rejected, it's equally as interesting for me. If we have a look at the Williams alligator indicator, and you can see this indicator all year has been very sketchy. It gave some great sell signals during the collapse at the start of the summer or the end of Easter, and you can see it's remained in bearish mode. But the interesting thing is now we start to stabilize above there, and if the market was to rally and this green line starts to flip and starts to turn higher, then we could definitely get a powerful move higher. So watch out if we do start to rally, because this will start to produce a strong buy signal. And if it starts to produce a strong buy signal, you can see we get strong trending moves. So at the moment, we're just consolidating above the bands. But if this starts to generate a buy signal, could set up a lot of momentum. Equally, if we fail, then we just enter back into another bear trend. So we're at a really important time for the market at the moment. So overall, hoping for a move up towards the 30,000 level. I think that would be the most interesting thing that could happen all year. Apart from that, we can't discount a huge rally from current levels if we see 24.5 broken, and then I'd expect 26,500 to happen. The drop below 21,600 could cause a significant decline in the market. The Williams alligator indicator, it looks primed for a move, either bullish or bearish at the moment. So once the next move starts to happen, I'm going to predict that it's going to be very, very big. So that's interesting as well. So my primary scenario is still 26.5, and then take a look and see how the market looks. Looking at Ethereum now, we can basically see if you draw this trend line here to the last real support area, we're kind of consolidating above there. So that tells me two things. Either we're going to fall here and move back down, or we're going to break above it and then we're going to start to move into a much higher range. And you can see this trend line here, which is basically the neckline of this head and shoulders pattern. You can see the market's tested it a lot of times, and when we've fell underneath, there's a big decline. So if we start to move above the highs, so say around 1,700, and there's a strong chance we can move towards 2.224 and test this trend line again. So that's what I'm looking at the moment. And obviously, the Williams alligator indicator is giving a strong buy signal on the daily time frame, which is not what Bitcoin's doing at the moment. So there's definitely a case to Bitcoin can post stronger gains for a little bit, and then this can really start to explode. If we have a look at this a little bit more closely, the trend line comes in at around 2.7. I'm not going to call that as a price target, but I think a more realistic price target could be 2.2 or 2.4. If this signal really starts to accelerate and this starts to turn up, and then we basically do the reverse of what we saw here, then we could easily see a big move higher, $500 very quickly in Ethereum. Again, this is the weekly time frame for the Williams alligator indicator, and we can see we're underneath those two bands, and there's no buy signal on the weekly time frame. So we're still in recovery mode, still in slow recovery mode, but we are above the first band. The second band comes in at around 2,200. If we have a look at the weekly time frame and look at this trend line here, so this is the entire downtrend. If we were to move towards that band, this is suggesting to me that the entire downtrend would be broken if we move above 2,341. So if we move above that line, we break the downtrend and we hold above there. Maybe we can see some fallback to 2,000, and then we start to move back into a bull trend. So that's the interesting target for me, and that's the interesting part of the chart as well on the monthly time frame that I'm looking at the moment. So overall, Ethereum could be headed back towards the former triangle breakout zone, which sits around 2.7, somewhere like that. I'd watch out for a big rejection or a breakout around this zone. A return to the summer lows could be on the cards if we saw a big rejection there, but again, for me at the moment, I think 2,600 probably remains more likely than 2,000.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.